In today's video, I am really going to be talking about houses and basically, are you ever going to be able to afford a damn house? This is a question that a lot of millennials like myself are asking, and even Gen Z or whatever the new generation is, we're kind of all asking the same question. What is going on with house prices? Why are they so damn high? And is there anything that will allow us to get into a house? Well, I'm going to break down some numbers, and it's actually going to be quite concerning. Okay, so on this first image, what are we looking at? Well, this line on the bottom is condominiums. The second line is going to be condo or townhomes. Those are those townhouses that you usually see that are attached to each other. And then there's freehold townhomes as well as detached homes, which is what I'm currently in right now, and I'm currently in the market for with just a larger piece of property. And this is the actual real estate here in Hamilton, Ontario. Now, even if you're American, don't click off this video just yet because a lot of the issues that we're having here are the exact same issues down there. And I think it's actually worse up here, and I'm going to get down to that right now. I graduated high school in 2008. The average house price here in Hamilton, Ontario was around $300,000, and to a lot of us, even back then, that was kind of insane because of where they went from in 2000, but we'd never seen the massive housing drop in 2008 and 9 as the Americans did down to the south of us. Now, we did see a little bit of a dip, but we didn't exactly see any crazy amounts. We just kind of seen our house prices stabilize for 2 years, and that's actually when, just before that, my parents got into their house, which is currently worth around $550,000. They purchased it somewhere around here, and it's a detached house, and they got it for a heck of a good deal. Now, I'm not too sure if these deals will ever exist ever again, but basically it was an out-of-town real estate agent who was listing the house. It was listed well under, and it was definitely a fixer-upper, and they got it for like just over $100,000. I think it was like $120-ish thousand. And now today, but basically 15 years later roughly, and we're now looking at a house that's worth around $550,000 to $600,000. How the hell did that house get in such a huge valuation in an area that never was really known as a fantastic area? It's a good area, but it's not like crazy fantastic. But then again, the average house price back then in this area was around $200,000. So they did get a good deal. However, moving from this time to today, we're looking at house prices that are essentially 3 times higher. 3 times. That is absolutely crazy on average. Not necessarily my parents' house, but on average, 3 times higher. That is absolutely ridiculous. And if we really go out and look farther down into the future, that is 3 times higher over a 15-year period. And let's say we look at the average house price right now, which detached homes right now, even though this graph was made in 2021, we're actually just got news recently that the average house price in the local area is $930,000. But let's go by this graph. It's probably more of the interior of Hamilton, and let's say we're looking at around $750,000 as the average, even though it's a lot higher for most houses in the local region. Let's say $750,000, which is a ton of money for an area that used to be worth $300,000 15 years ago. So when we're looking at that, let's say on average over a 15-year period, even though this is 14, it's 3 times higher. If we go 750,000 times 3, that puts us to $2.25 million in 15 years. What does that mean for us millennials? Well, it means that by us not investing in buying a house and going up to debt to get a mortgage, that actually means that we are literally pricing ourselves out of the market for each hour, essentially, or each day, or even each month that we're not buying a house. And this is even worse when it comes to high school students right now who are, let's say, 15 years old. By the time they turn 30, the average house price here is going to be $2.2 million. if the housing prices continue to go the way they are. And then, if we really look at it even farther down, the kids who are being born right now, when they are 15 years old, it'll be worth $2.2 million. And then if that price increase continues for another 15 years, by the time the kids who are being born today turn 30, the average house price here in Hamilton will be $6.7 million. What does that tell us? Well, that tells us that this is a housing bubble, and will it crash? Well, it's actually a very difficult question because there's so many different issues that we have here in Canada, and the Americans have this as well. Let's get down to some of the most obvious answers, and that is we just don't have enough people right now putting their houses up for sale. Literally, the areas that I'm looking at are properties that have 1 acre or more that I'm allowed to build a steel building on, or at least a big garage so I can build an indoor basketball court to run my basketball training company. And that way I can all be in one location, because to rent a court here in Canada, it's like $50 to $150 an hour. I'd rather just build my own court for $100,000 and say I'm done with it. I don't need to rent a gym. And if you wanted to rent a building to be able to do that, you're looking at for $3,000 plus a month. So you might as well just buy a big property, build a steel building, and put a basketball net in. But either way, what I'm trying to say is that housing prices right now are going up huge because of one main issue, and that is housing availability. In the areas I'm looking, there used to be 3 years ago 100 plus properties for sale. Now there's 8. That is a massive change, and that's why the housing prices for the areas that I'm looking at have gone from $400,000 just 8 years ago to now being $2.5 million. That's ridiculous. And when we start looking into it even farther, what's also fueling this massive surge that we've had since 2019? Literally, when the COVID hit right here, guess what? Housing prices have skyrocketed, $200,000 on average. This is crazy. Will this have a little bit of a pullback? Maybe even a 5 or 10% pullback? That's totally possible. But guess what? A 10% pullback from 800,000 is only putting it down to 720. And even at that point, that's still a ton of money. But the second issue is the fact that the cost of wood has gone up in price, which means that building new houses, because of course the kids are starting to move out of their parents' houses, and Gen Z is doing that, millennials are doing that, we're all trying to get out of our parents' houses, and there's just not enough supply because the parents are not leaving their houses. There's more and more supports for older people to get help in their homes. And because of that, they want to also hold on to their houses because their valuations are going higher and higher and higher. And if it's anything like my grandmother, who just recently passed away about a year ago, she held on to her house until she was 99 years old. She was in a hospital for, she was 100 years old when she still owned her house, and then she went into the hospital, and she later passed on, but she still had her house literally until a day before she passed away. And she always said that she wanted to hold on to that house because the value of that house is going up higher than whatever she could invest her money in, and because of that she wanted to be able to hand down that house to her kids so that her kids can have the most money as possible. And when we're seeing older people stay in their houses like that, that's just going to fuel even more of the housing crisis of just not enough houses being available, and that is what will bring up these house prices even more. On top of all of that, that's only 2 issues right now. The third issue is we're seeing a lot of people, individuals, businesses, and international investors who are coming into our housing market and purchasing homes, apartment buildings, complexes of just townhouses, whatever. They're purchasing as many houses and properties as possible because what these people are trying to do is to make revenue so that obviously they can live their lives. They want rental properties. That is a huge thing right now. We're not just seeing big companies do this. My neighbor is even doing this right now and purchasing new townhomes and renting them out. Brand new townhomes, purchase it, rent it out. And while I don't disagree with them trying to make money for themselves, it's just fueling the fire even more of house prices going up, because now an individual, let's say my neighbor, for example, who owns a couple of houses, well, guess what? Sure, he's making money. That's fantastic. He is basically going to be able to retire early. But guess what? Now there's 3 or 4 different families who can't buy a home. They have to rent. And that is just going to be fueling the fire even more, because we're seeing businesses do it. REITs are making a killing right now. And then on top of it all, international investors from Russia and China are really hitting us hard, and especially in the Toronto area and BC area. And then also, what we're also seeing is the fact that it's just so many people online who are so-called experts saying buy houses and flip them was the thing back in 2009, but now they're saying buy them, fix them up, and then rent them out. Buy, fix, rent out. Buy, fix, rent out. Buy, fix, rent out. We're seeing people like Graham Stephan. I watch him a lot. He was doing that, but he wasn't promoting it really all that much. But there's a ton of people who are selling programs on how to do this, and fine, that's fine. These people are going to be making money, but at the same time, they're just making it worse. So even though I respect what they're doing, I also disagree with what they're doing, because it's just making it worse. And it's usually people who are in their 50s and 60s who are doing this, and it's really hurting the younger generations when they do this. And then on top of it, at least here locally, another issue that we have is we'll have, let's say up near Milton area, where these companies will buy a big property and they'll build 10 houses. They'll make plans for 50 houses, but they'll build 10. And then they'll wait next year and they'll build another 10. And then a year later, they'll build another 10. Even though they have plans for 50, they're going to spread out those 50 so that they don't raise the cost of houses too much. They're artificially inflating the price of houses because they're limiting how much is on the market. So that's another issue that we're having, at least up here in Canada, and I've heard of stories down in the States like that too. So what does that all mean? Well, when we look down on this chart right here, what do we see? What we see is the median age of U.S. homebuyers has gone from the average age back in 1981 now being the age of 47 today. What does that mean? Well, of course, we've had some recessions in between. We've had some pretty massive ones. But guess what? This is absolutely terrible. This is telling at least myself that house prices have been accelerating during this time and getting to a point where it's pricing out younger buyers. And that's only going to continue. It's not going to get any better if house prices continue to go up. Because what do we need now? Let's say the average house that's already been renovated and fixed up here in Hamilton is, let's say, around $1 million. It's roughly around there for something that is a very comfortable house to live in. And now that might seem like a lot of money to Americans. Up here, it's really not that bad because the average house is basically $932,000. And if we're looking at $1 million house, because that $932,000 is pretty damn close to $1 million, guess what? That $1 million house is going to be very hard to purchase if you don't have 2 lines of income. What happens when you become older in your 40s? You have 2 lines of income. You have your wife and you also have yourself. And if you've got your wife and yourself as income, let's say their average income is what the average income of Canada is, which is $50,000, that puts them at $100,000, and they can just barely purchase that $1 million house because we have laws, or at least rules here in Canada with mortgages, where you cannot exceed 33% of your income. So for example, if I'm making $10,000 a month, my mortgage can't be usually more than $3,300 a month. And that is because they want to put those special cases, I guess you could say, the ones who are not making enough, and let's say they were making around, let's say $6,000 a month and their mortgage is $3,300, well, guess what? that $6,000 is not going to be able to cover the rent, as well as a savings account for a future date, as well as food and internet, because internet's ridiculous price up here, and everything else. So that's why they have these rules. And then if you buy a house that's under $1 million, if you don't put more than 20% down, I think they're raising it to 25%, then you need to add an extra couple of $100 a month for mortgage insurance, because the banks don't trust you. And there's basically a rule that all mortgages have to be insured, and you pay for it if you don't put more than 25% down, which is why the Canadian banks are a fantastic investment, and you'll never have to worry about a housing crash if you invest in the banks. They may have some bad months, but everything's insured and they'll never go under. So this is what's fueling the fire. And then there's also Trudeau, who also wants to put on a tax apparently, and it was in his election promise, and nobody talked about it, and now they're talking about it, and apparently there's a tax that they want to put on individual homes. I've heard anywhere from 5 to 25%, which means that if you sold $1 million house, you'd only be getting $750,000 minus commissions, which would then put it down another 30 something thousand. So you'd be really ending up with just over $700,000 from an average of $1 million house. Well, that won't affect the home seller, because guess what the home seller is going to do if they do that? If they put a tax on a house that you've been living in, the house seller is just going to say, oh, that's nice. Well, how much is tax going to be? $250,000? Well, then I'll just raise my price up to $350,000 on top of that $1 million. So now that house has gone up 30-something% just because the government wants to tax it, because they think that by taxing it, they'll bring the house prices down. But that's just not going to happen. So there is nothing the government can do right now other than forcing home builders to build houses. Other than that, there is nothing that is going to stop the price of houses from going up, and I really don't think that there's going to be new home buyers from kids who are currently being born right now. I don't think in 20 to 25 to 30 years that any kid coming out of high school or even college is ever going to afford a house if these house prices somehow don't go down, because they don't look like they're going down anytime soon. That's my rant. That's what I'm thinking. I hope that you've enjoyed.